Hey Sujit, good evening. Sujit, good evening, Harish. Voice bit low now. I think it's a sufficient voice. I got a huge voice in my mobile. Okay, Harish. Shall we write our session today? Okay, Sangeeta. Then okay, guys. Without late, I'm starting our session. Today is our fourth revision class. That is nothing but fourth chapter. Sure, Sujit. I will discuss problems also. Okay. So when coming to next chapter, sure. Hi. You can easily crack. When coming to all attempts, last attempt is a little bit difficult. So a lot of students who focus only on rely on marathons revision classes, it not might to answer all questions. So that's why you got a 34, no issue. In this attempt, don't feel you can easily crack more than 60. So not only revision class, you have to focus important questions. At the end of the session, I will tell the theory questions. You have to focus more on that also. It will help you. So first thing, 60 is sufficient. Getting a 60 is okay in SPM BV. Why? Because predictable question paper. But the last time they played their game. So even comparing to all papers, SPM BV is the difficult paper in last attempt. So that's why a lot of students are got less than 60 marks. Some are failed, etc. Okay. So if it's a first time listener, not only rely on these revision classes, you have to focus all problems in your board material as well as MTPs, RTPs. Why? Because in revision class is not time to explain all. That is the issue. Okay. So no worry, just understand the concept. Based on the concept, go and check remaining problems. That is helpful you because you are not attending any classes. If you are already attending classes, this revision class is sufficient. Sir, give some tips to learn Z-score and M-score. Harish, there is a no tips, man. I tried lot of times. You have to by heart that. You have to by heart that. Why? Because if it is a subject, I can simplify. I give some more clues to keep that points in mind. But when it comes to this course, sir, very there is a no basic for standard. That's why you have to mug up. And when it come to M score is the only difficult thing. Remaining three, we can easily mug up. Okay. Why? Because there is no subject involved on that score. That's why, as a faculty, I'm saying that please mug up. If you by hard every day 1 or 2 times, automatically it will give. And you need to keep that code in different ways. So share to some other people, share to your friends, share to your family members for small things. You can easily keep in your mind that point. Okay. Without late, we start with chapter 4. Enterprise risk management. You can also use the word capital adequacy ratio problem, also very important, Nani. I will explain that problem also. So when it comes to enterprise risk management, sometimes you can also use the word called corporate risk management. Both will give a same meaning. Harish, sir, I did not study ICMA study mat. I cover only your books, sir. Sufficient, Harish, no issue. Why? Because compared to ICMA material, you have a more number of models in our material only, not my our material. So when it comes to enterprise risk management, when it comes to exam standpoint of view, one theory question, 7 marks, one problematic question, 7 marks, and two MCQs, 4 marks. So this is the on an average, you will receive marks from this chapter. So theory question, you have to learn more topics for getting this 7 marks. But when it come to problematic portion, if you focus only 4 concepts, you can easily get that 7 marks. So without late, I start with that problematic portion. Now, when it come to problematic concepts, problematic concepts. When it come to problematic concepts, the first concept is estimation of corporate sickness estimation of corporate sickness. Concept number one, estimation of estimation of corporate distress. Second concept, estimation of estimation of false financial statements. Third concept, calculation of capital adequacy ratio. So these are the four concepts we have in numerical point of view. Okay. So because of my revision classes, I'm not saying about myself. So it is important concept corporate sickness. This corporate sickness problems not there in your ICMA material also. So this corporate sickness is an important concept in whole syllabus. For the future point of view, I inserted that concept in last but one attempt. They asked this corporate sickness concept. Hope you guys clear. So if you focus, if you check your material also, there is no problems regarding to corporate sickness. They provided only concept. Guys clear. Next, when it come to estimation of corporate distress, this related problems are there. Number of problems is there in our material. Next, when it come to this false financial statement calculation, that is nothing but Beneish M-Score. This also is there. And capital adequacy ratio concept newly added in new material. In first attempt, December 20 of I think June 23 attempt, first attempt itself asking this question, calculation of capital adequacy ratio. Even though a lot of students don't know the concept. Why? Because they're asked a problem based on CA level, that information not inserted in our board material. Even though there is no information, they're asked a problem regarding to capital adequacy ratio. I researched a lot for calculation of capital adequacy ratio. I prepared notes also. It is helpful you in this revision class. Hope you guys clear. Now, when it come to estimation of corporate sickness, so this all concepts are relating to corporate failure. Corporate failure. Wait. These three concepts is known as, not all concepts, these three concepts is known as corporate failure concepts. This is relating to banking company related concept. So these three are all companies. This concept only for banking company. Basic thing you have to understand. Okay, sir, what we learned in this corporate failure? When it comes to corporate failure, there is a lot of issues in the corporate. So internal issues is there, external issues is there. Due to all issues, companies are failuring today. That is the reason. So due to internal issues or due to external issues, lot of companies are failuring today. So as a cost accountant, you have to predict the features. You have to predict the future of the company. That's why companies are recruiting you. Hope you guys clear. Now, why companies are recruiting means because of you are the predictor. You are the financial doctor. That's why they are recruiting you. As a financial doctor, you have to assess, you have to estimate the company strength and weaknesses today about the future. So in future, what are the consequences happen in the company? You have to figure out today or now. That is a concept called production, estimation. I used a word called estimation. These are not actuals. We are estimating today of the future happenings. Okay, sir, how I estimate, how I calculate? Okay, let us check. When it comes to the word itself saying that sickness, if it is a health issue, we are approaching the doctor. If company have a health issue, they will approaching you. That is called sickness. So today, you with the help of some ratios, with the help of some knowledge, you are easily predicting company will continue or shut down in the future. So with the help of this concept of corporate sickness, you can easily estimate the company will continue or shut down in the future. Sir, okay, so I am predicting company will continue or shut down in the future. That is called sickness now. Okay, how I predict? That is the point. How I predict? How you predict means with the help of NCAER model. With the help of what concept, guys? With the help of NCAER model, you can easily predict future of the company health, future health of the company. They will continue, they will survival, or they will shut down. For the purpose, you have to use a model name called NCAER model. Okay. So after NCAER model, this is called sickness related issues. Next, you have to focus on the corporate distress. Distress means bankruptcy. fail or non-failed calculation. Fail of the company, estimation of failure or non-failure of the company is known as the corporate distress. Sir, how I calculate this? For the purpose of estimation of corporate distress, we are using a concept name called Altman G-score. Altman G-score. I will give a more clarity at the time of concept explanation. As of now, just understand the names. Okay. For a sickness point of view, I am using NCAR model. For the distress point for the calculation of distress, I am using Altman G-score. Okay. Next, when it comes to the concept estimation of false financial statements. So as a valuer or as a CMA, we are easily assess company prepared financial statement truly or not. Sometimes a lot of companies show the window dressing, so they will show the more profits instead of less profits. So that happen or not calculation is known as a estimation of false financial statements. That also we can easily predict with help of the concept name called Beneish M-Score. So estimation of company done a fraudulent financial prepared. We are assessing company prepared statements are true or fraudulent. For a true or fraudulent purpose, we are using a concept name called Beneish M-Score. Okay. Next, when it comes to capital adequacy ratio, so lot of banking companies are facing non-repayment of the loans. For the even though there is a non-repayment of loans to the company need to survive. Yes or no? Na? Company need to survive means how much company need to maintain a capital for survival purpose. We are using this capital adequacy ratio calculation. That concept also known as a capital adequacy ratio calculation. So these are the four concepts. For a sickness purpose, NCAR model. For distress calculation, Altman G-score. For false financial statement purpose, Beneish M-score. For banking minimum required capital purpose, capital adequacy ratio. You have any doubts regarding the concept this content? If you are happy with this explanation, then we will start with the concept. If you have any queries, now ask me. Please respond. Are you clear? Is it clear? Good, good. Okay. Now, without late, we are starting with the concept called estimation of corporate sickness. Estimation of corporate sickness. Okay. For calculation of sickness, we are using a concept name called what, guys? NCAER model. NCAER model. Yeah, Jane. We will cover workbook also. So the word NCAER means National Council of Applied Economic Research. This is the full form for NCAER model. National Council of Applied Economic Research. Okay. So in NCAER model, we are focusing on three elements. The first element is we have to check cash profit position of the company. First, you have to check what's the cash profit position of the company. Next, after checking the cash profit position of the company, you have to check second element called net working capital position of the company. After calculation of cash profit, after finding cash profit position and net working capital position, you have to find out net worth position of the company. So if you know the cash profit position, net working capital position, net worth position, you can easily answer, you can easily say the decision. Okay, sir, how to calculate this cash profit position? Simple. So calculation of cash profit is nothing but estimating the cash profit position. Sir, how I calculate cash profit? So cash profit is nothing but CFAT. You learned in your CMA Inter FM capital budgeting chapter. There is a concept name called cash flow calculation. So the cash flow calculation is nothing but CFAT, or is also be known as cash profit. Is also be known as cash profit. Why we are find out in this cash profit means for the purpose of profitability measure. So we are checking the company profitability with the help of this cash profit calculation. Sir, when it comes to cash profit calculation, net profit is an accounting profit, that is nothing but PAT. This is it followed by accrual concepts. You know, I hope you already know accrual concept means received and receivable, paid and payable. But I don't want received and receivable, paid and payable. I want only received and paid. For the purpose of received and paid, if any receivable or payable transactions are included, I am excluding now. I mean, if it is already included, I am excluding now. Now see, net profit is an accounting profit. Non-cash expense, add non-cash expenses. Why? Because they already deducted from the profit because of a accounting rules. But I don't follow the accounting rules. I'm following the cash rules. That's why what are the expenses we are already deducted, even though it is a non-cash, we are adding back. When it comes to less non-cash incomes, these non-cash incomes are included in our net profit. So that that incomes generated not because of cash, that's why I am deducting. If already adjusted, you have to readjust. If already included, please reduce it. If already not included, deducted, you have to add back. So due to that readjustment, that non-cash is converted into cash. Hope you guys how to calculate cash profit. Okay, next we are checking the net working capital position of the company, right? So why we are checking the net profit position means for the purpose of knowing the liquidity measure. For the purpose of knowing the liquidity measure, company short-term cash, how much they have to repay the short-term liabilities, short-term capital, short-term assets, how much they have to repay the short-term liabilities. That is called liquidity measure. In simple calculation of working capital, how you already know the working capital is nothing but current asset minus current liability. Current asset minus current liability. Next, I assessed cash profit position, I assessed the net working capital position. Next the topic is net worth position. So why we are checking net worth position means for knowing the long-term solvency. This is for short-term solvency, this is for long-term solvency. So for long-term solvency, you have to calculate net worth. So this net worth is also be known as equity. This equity is also be known as net assets. It is also be known as proprietary fund. It is also be known as owner's fund. It is also be known as intrinsic value. So these are the alternative names we have for the net worth calculation. Sir, how I calculate net worth calculation? Equity share capital plus reserves and surpluses minus P&L account debit balance. The word P&L account debit balance is nothing but fictitious assets. Fictitious assets. So this fictitious assets like in balance sheet ending, asset side ending, they're using a name called P&L account debit balance or goodwill written off or preliminary expenses written off. This kind of all covered under fictitious assets. If any fictitious assets is there, you have to reduce from the sum of equity share capital and reserves and surpluses. So this is a way to calculate cash profit, net working capital, net worth. Next, after calculation, you have to understand, you have to provide a decision. When it comes to decision, case 1, out of 3 measures, 1 will be the negative. Out of 3, if you have say 1 answer is negative, company becoming a sick, there is a chance of sick. There is a chance of sick. Case 2, out of 3 measures, 2 will be negative. Out of 3 answers, if you have a 2 answers are negative, in spite sickness, it means sickness started, working progress started. Next, out of 3 measures, 3 will be negative, company fully sick. Have to started, fully sick. Guys, clear? This is the concept 1. estimation of corporate sickness. If you have any doubts, ask me regarding this concept. So don't focus on the calculation part, just understand the concept. You have a conceptual clarity, you can easily answer any question. Please respond. If you have any doubt, ask me regarding this NCA model. So if you provide valuable responses, I start numerical calculation. So your comments will boost up me. Please respond. Okay. Suchit, clear so. Okay, Suchit, what about remaining people you are not understand? Huh? If you understand, please respond. Now, Ganesh, in all problems, they're not used the word preference share capital. If they use a preference share capital in the question, you have to consider for the net worth calculation. Why? Because at the time of valuation of assets and liabilities, I explained, not only that time, the reality fact is equity equals to equity share capital plus reserves and surpluses plus preference share capital minus fictitious assets. This is the actual formula for equity or net worth or net assets calculation. So equity is nothing but equity share capital, reserves and surpluses, preference share capital. So why? Because the word equity is also be known as internal capital. Internal capital. So I think in CFR, your lot of times you are used net assets equals to total assets minus external liability. So this net assets is nothing but equity, that is nothing but net worth. Don't confuse. So just it's alternative names. So that equity can be calculated in two ways: liability side point of view as well as asset side point of view. When it comes to asset side point of view, total assets minus external liability. This external liability is simple: long term liability plus current liability. Only these two is known as the external liability. This is asset side calculation. When it comes to this liability side calculation, equity share capital plus reserves and surpluses plus preference share capital minus fictitious assets. Sir, preference share capital is also be outside now. No, sir. So preference share capital is a hybrid debt, hybrid security that have a both ownership qualities, I mean equity share capital qualities and debenture capital qualities. Even though it is a outsider fund, we are treating is a owner fund. We are treating, they're not a owner fund, we are treating as a owner fund. That's why at the time of calculating equity, we are adding preference share capital. So Ganesh, you understand the logic behind that. So preference share capital is also be part of the net assets and equity calculation. So take your calculator, show your speed. So balance sheet extract of Q Limited. This question asked in June 23 in world syllabus. As on 31st March 2014. Equity shares, that is nothing but equity share capital. Long-term liabilities, liability. The word liability, so the word here is there. Send this to here. So long-term liability, current liability. Fixed asset, current asset, profit and loss account. If profit and loss account shown in asset side, that is called fictitious asset. That is called fictitious asset. Okay. Additional information also they provided. Depreciation written off. Depreciation written off. So 8 crores. So this depreciation written off already we are shown in P&L account. Preliminary expenses written off. This also we show already shown in a P&L account in expenses side. So net loss they given. Sir, I revised the third chapter today and I got a clear all derivative concepts. Thank you. Oh, okay, Ganesh. Okay, good man. So if you show that attitude towards all subject, trust me, you will get a rank. So additional information. So depreciation is given, preliminary expenses is given, net loss is given. Instead of profit, they provided net loss. Take directly net loss. Now, what is the first calculation? Cash profit. Net profit plus non-cash expenses minus non-cash incomes. Okay. Now, the cash profit calculation, instead of net profit, they provided net loss. Net loss, add non-cash expenses less non-cash incomes. So there is a no explanation of the non-cash expenses. That's why we are not focusing on that. So we have only non-cash expenses. Let us check. Cash profit equals to, already we have a negative value, 25.6 crores plus this depreciation written off is a non-cash element. That's why this already we deducted in a P&L account. So depreciation is a non-cash element, but we are deducted. That's why we are adding again. Add 8 CR. Next, this preliminary expenses also we already deducted in P&L account. It is wrong. Why? Because we are focusing on cash only. That's why I am readjusting. Less readjusting, add 1.6. Now there is a no non-cash expenses. The answer is 8 plus 1.6 minus 25.6. So the answer is 16 crores. The answer is what, guys? 16 crores. Negative. The word negative is very, very important. The word negative is very, very important. Cash profit completed. What next? Working capital. Working capital equals to current asset minus current liability. They already directly saying here. So these are the current liability. These are the current asset. Current asset 40 CR minus current liability 78.4 CR. Now the working capital equals to 40 minus 78.4. So the answer 38 point, sorry, not 40, it's a P&L account. So 57.6, sorry guys, 57.6 minus 78.4. The answer is 20.8 CR minus. Next, net worth position. That is nothing but equity. Equity is nothing but equity share capital plus reserves and surpluses plus preference share capital. Yeah, man. Just now I seen. So equity share capital plus reserves and surpluses plus preference share capital minus P&L debit balance called fictitious assets. I don't have a reserves and surpluses. I don't have a preference share capital. That's why 20.8 minus fictitious assets 40. Now the answer is minus 19.2 CR. Minus 19.2 CR. Now go and check the three answers for decision making. First one is negative, second one is negative, third one is negative. As per our conceptual knowledge, if we have a three options if your three options are negative, your company is fully sick. That is the ultimate conclusion or ultimate comment. Any difficulty in this calculation, guys? Easy calculation, right? So if it is an easy calculation, if we show the direct calculation, you will not get 7 marks. So if you show the direct calculation in your answer sheet, you will not get a full marks. Sir, how I get a full marks means you have to write theory content first. You have to write a theory content first. After writing the theory content, so you have to write this all. So for the estimation of corporate sickness, we are using NCAR model. In NCAR model, three elements is there. First element is cash profit position. Next one is net working capital position. Next one is net worth position. So we are using cash profit. We are using cash profit position calculation for profitability measure. We are using net working capital calculation for liquidity measure. We are using net worth position for long term solvency measure. After writing that point, calculate, put a heading calculation, write down this cash profit calculation formula, write down this net working capital formula, write down this net worth formula. After writing the formulas, write down the decision properly. If case 1, case 2, case 3. After this is the theoretical explanation you have to provide. After providing the theoretical, you have to put in a word analysis. In that analysis, you have to calculate step 1, step 2, step 3. After completion of analysis, you have to use a word called comment or conclusion. On that comment or conclusion, you have to use the decision. So after writing this all only, you will get a full marks. Guys, clear? If you show only direct calculation, trust me, you will not get even 5 marks. If you want a 7 marks, you have to write theory content first. After writing the theory content, solve the answer. After solving the answer, you have to go the comment. Hope you guys all you understand how to write in the exam. So if you do the direct calculation, you are not get full marks. So if okay with that, I will start the next concept. Wait. There is some more problems is there. So ascertain the question they asked, man. Ascertain the stages of sickness. So because of the word stages of the sickness, we are used NCAR model. Next, when it come to fourth problem, so it also be same. Using the NCAR model also they specified. Use the NCAR model for corporate distress production. You are required to ascertain the stage of sickness. So students are confusing here. Sir, they're using a word called distress as well as sickness. Which model I have to use? They specified na NCAR model. Sir, name is not a issue here. So don't focus on the names. Focus on the information availability and as well as clues we have. So we have a clue. Directly they're saying NCAR model. That's why I'm not focusing on the separate words. So here also net loss is given and some two expenses, two non-cash expenses given. If you adjust, you will get a cash profit. And total assets is net worth directly they given. Don't calculate, directly given net worth. So directly take that net worth value as well as current asset is there. Yeah. So current liabilities is there. Total current liability is there. And the total current asset is there. Current asset minus current liability, you will get a net working capital. So after solving it all, you have to write the comment. So the I think all are minus. So all the three parameters are negative. Hence we can conclude that the company is sick company and its stages of sickness is fully sick. Okay. Next. So these are the two problems for a discussion. So you have our material. Go and check in practical questions for self practice. In self practice, we have some more questions regarding to sickness. Nothing is difficult for calculation, guys. The only thing is we have presentation. So in this chapter problems, they're expecting presentation. Presentation is very, very important. So I think this concept is clear for all the students. Concept as well as calculation part. If you have any doubt regarding this, please ask me. NCAR model concept. Yeah, two problems is enough, man. So there is a chance they can change the question paper like this. They will give, instead of net loss, they will give net profit. They will give net profit. So on that time, you have to use the calculation. They will just change the elements, not the concept. So these two problems and some more two problems is there in self practice. You can go and check. That is sufficient. Harish, clear? Jane, clear? Ganesh? Next. So next concept number 2. Production of corporate distress. Production of corporate distress. There are these notes, paid or free. It's a free notes, man. It available in all groups. You can go and search SPMBV notes. You will get this. Or if you follow the Bhaskar sir Telegram channel or my Vice Telegram channel, you will get these notes. Concept number 2, reduction of corporate distress. Reduction of corporate distress. I already told, for the purpose of sickness, we are using NCR model. For the purpose of corporate distress, we are using Altman G-score. Altman G-score. You have to understand the clarity between the sickness and distress. After getting a practical calculation, then you will get a more clarity. Okay, come to here. This person is there, na? This boy name is, this boy, not BHAI, BOY. This boy name is called Altman. Altman. So he was created a one concept called Altman G-score for the purpose of we can estimate today of future of the company, future success or failure of the company today itself. For that purpose, he consider 33 failed company information and 33 non-failed companies list. They procured 33 failed financial statements, 33 non-failed financial statements. On that 66 companies financial information, they're only focused on 22 accounting ratios and 22 non-accounting ratios. 22 accounting ratios, 22 non-accounting ratio. So this 22 accounting and non-account, with the help of this 44 ratios, they created a concept called Altman G-score 1968 model. This is the first model they introduced. After that, he find out some mistakes happening that 1968 model. Then he revised in 1983. So first created in 1968. Next he revised in 1983. So in this 1983 also he find out some mistakes. Then he revised 1983 into again. That again concept is called revised 1983. 1983 revised 1983. In Altman G-score we have a 3 models: Altman G-score 1968 model, 1983 model, revised 1983 model. These are the 3 models we have in Altman G-score. Guys, clear? So this model A, model B, model C, understanding purpose I wrote. So the true name of the model is Altman G-score 1968 model, Altman G-score 1983 model, Altman G-score revised 1983 model. Sir, where can we get these questions? I have not purchased your book. So if you have not purchased my book, it's not easy, ma'am. You have to refer old board book, old syllabus, 2016 syllabus board book, and workbook for that 2016 syllabus, as well as new material, new board book. If you follow these 3, as well as last 10 attempt question paper, you will get that questions. Okay. Now, without late, I start with model A, guys. Model A. So Altman G-score 1968 model. When it comes to Altman 1968 model, the code is G-score equals to 1.2x1, 1.2x1 plus 1.4x2 plus 3.3x3 plus 0.6x4 plus 1x5. That is a code you have to mug up. There is no subject to simplify that. It is just a code: 1.2x1 plus 1.4x2 plus 3.3x3 plus 0.6x4 plus 1x5. Guys, clear? Now code okay, sir. 1.2 plus 1.4 plus 3.3 plus 0.6 plus 1. What about that x1, x2, x3, x4, x5? Let us check. That x, I already said now, he considered 22 accounting and 22 non-accounting ratios. On the 22 accounting and 22 non-accounting, they finally taken only 5 ratios. X1 called liquidity measure ratio. So X1 called liquidity measure ratio. Sir, how I find out that liquidity measure? Working capital divided by total assets. Working capital divided by total asset. X2. In X2, they're focusing on reinvestment of returned earnings. Reinvestment of returned earnings. Sir, how I calculate X2? Reinvestment of returned earnings. Returned earnings divided by total assets. Returned earnings divided by total assets. Next, X3. X3 he used for profitability measure. He used for what, guys? Profitability measure. Sir, how I figure out profitability measure? EBIT divided by total asset. EBIT divided by total asset. Next, X4. X4. He used X4 for measure of leverage. The word leverage means risk. The word leverage means risk. For the purpose of calculating risk, they are using a concept market value of equity share capital and market value of preference share capital in numerator divided by book value of a total debt. Hope you guys know what is the mean for market value and what is the mean for book value. Number of shares into market price, you will get a market value. What are the value we are maintained at face value, that is called book value. So market value of equity share capital plus market value of preference share capital divided by book value of total debt. The word book value of a total debt means long term debt plus current debt. Long term debt plus current debt. Now x5 equals to asset turnover measure. It is an activity ratio, sales divided by total assets. Sales divided by total assets. When it comes to exam point of view, sometimes they will give directly this working capital information, return earning information, total asset information, EBIT information, market value information, sales information. So sometimes they will give direct x1 answer, x2 answer, x3 answer, x4 answer, x5 answer. You have to directly calculate. You can usually directly calculate. Sometimes they will give a balance sheet. So that is only a time consuming time. So even though we can easily solve in within 10 minutes, if they provide balance sheet, you have to calculate working capital first. Next, total assets, you will get x1. Next, returned earnings, you already calculate total asset, you will get x2. Next, you have to calculate EBIT. You already calculate total assets, you will get a x3. You have to calculate market value of equity share capital and preference share capital, and you have to calculate book value of a total debt. If you calculate both, you will get a x4. You have to calculate sales, you already calculate total assets, you will get a x5. Guys, clear? Now after calculating G score, you have to say decision. When it come to decision, if your answer is greater than 2.99, if your answer is greater than 2.99, your company is a non-failed company as well as a non-distressed company. For example, you calculated G score, but your answer is less than 1.81. If your answer is less than 1.81, your company is a distress zone. Your company is a failed company. Now, your company is a failed company. Your company is a distressed company. Okay. If your answer is in between the 1.81 and 2.99, if your answer is 1.81 and 2.99, so the company is alert and is said to be gray zone. It is called safe zone. It is called red zone. It is called gray zone. So there is a chance of failure as well as there is a chance of success in third case. This is the Altman G score 1968 model. Next, when it come to Altman G score 1983 model. When it come to 1983 model, so the G score equals to 0.717x1 plus 0.847x2 plus 3.107x3 plus 0.420x4 plus 0.998x5. So Harish asked, sir, please give me shortcut for this formula. So it is for you only I am creating here, Harish. Let us check here. This last number is 1, right? Last number is 1 as per 1968. But when coming to here, 0.998. 1968 model. X4 is 0.6, right? Here 0.420. So automatically we all are okay, 0.420. Next, x3 3.3. When it come to here, 3.107. X2 1.4, 0.847. 1.2, 0.717. Guys, clear? With comparison, you can easily mug up, man. So last two we can easily mug up. 0.998, 0.420. When it come to third one, 3.3, 3.107. When it come to second one, 1.4, 0.847. When it come to first one, 1.2, 0.717. So with the help of this logic, you can easily mug up. Harish, happy? Next, when it come to x1, same liquidity measure, working capital divided by total asset. X2, reinvestment of retained earnings divided by total asset. X3, profitability measure. Yeah, 7 last for 1 2 3 exactly 7. You know na high 7 is a reason, tala for a reason. So x1, working capital divided by total assets. X2, liquidity measure. Not liquidity measure. It is called reinvestment measure. Reinvestment of returned earnings. Return earnings divided by total assets. X3, profitability measure. EBIT divided by total assets. X4, leverage. Understand? So this is the difference point we have. Difference between 1968 and 1983. In 1968, we are using market value of equity share capital and preference share capital. In 1983 model, we are using book value of equity share capital and book value of preference share capital. That is the only that is the difference between 1968 and 1983. So if the question there is no specification of the model number, so we are taking a assumption based on this x4. If we have a market price information, if there is no clarity in the question, they not specified the model name. If they not specified the model name, we have to take one assumption na. For the assumption is if question provides a market value information, that is a 1968 model. If question not provide market values, it is a 1983 model. Hope you guys clear the differences. Next, X5 is common, sales divided by total assets. Next, when it come to decision also differ, man. 2.99, but here only 2.9. Safe zone. 1.81, 1.23. Distress zone or red zone. Between 1.81 and 2.99, but here it come to 1.23 and 2.9 gray zone. So this is the 1968 model as well as 1983 model. So after completion of 1968 and 1983, we have to focus on this model C. Up to now, from last 10 or 15 attempts, question paper setter not touched the concept model C, guys. Even no problems in our board book as well as old material and new material and all sources we have. There is a no single problem related to model C. Even though there is a no single problem, please focus. So when it comes to Altman G-Score revised 1983 model, they focused only on 4 ratios. So there is a 5 ratios, model A, model B. If you have only 4 ratio information, it is model C, that is called revised 1983 model. So 6.56 x1, 3.26 x2, 6.72 x3, 1.05 x5. So x1 means same liquidity measure, working capital divided by total asset. X2, reinvestment of retained earnings divided by total assets. X3, liquidity measure, EBIT divided by total assets. X4, leverage, book value of equity share capital and preference share capital divided by book value of a total debt. There is a no x5. There is a no x5. If there is a no x5, it is a 1983 revised model, last model. If x4 is relating to only book value information, it is 1983 model. If question have a market value, that is a 1968 model. So when it come to model, last model decision making, if your answer is greater than 2.6, you are at safe zone. If your answer is less than 1.1, you are at danger zone. If your answer in between them, you are at gray zone. So this is the concept name called Altman G-Score. So any doubt regarding this Altman G-Score? If you have any doubts, ask me. We start the problems. We have a less time. Speed up. Now see question number 5. Question number 5. This question asked in December 23 for 10 marks in old syllabus, guys. In old syllabus. If reference is 10 mark, it is a old syllabus. If reference is 7 or 8 marks, it is a new syllabus. Okay. X1 they provided, X2 they provided, X3 they provided, X4 they provided, X5 also they provided. Let us check which model they specified. From the information given below relating to unfortunate limited, calculate Altman G-score. Yeah. So they used word called G-score, but they not specified the model. I already told how to decide the model. If you have only 4 ratios, it is a model C. If you have a 5 ratios, next you have to check two models, 68 and 83. So how to check 68 or 83 with help of X4? Let us check X4. This is the X4. If X4 is a market value of equity share capital and preference share capital divided by book value of a total debt, it is a 1968 model. If it is a book value of preference share capital and equity share capital divided by book value of a total debt, it is a 1983 model. So it is a market value of equity they provided. That's why it is a 1968 model. So when it comes to 1968 model, 1.2 x1, that is nothing but 1.2 into 0.45 m plus 1.4 into 0.25 m plus 3.3 into 0.3 m plus 0.6 into 2.5 m plus 1 into 3 m plus MRC. The answer is 6.38. The answer is 6.38. So if you get an answer 6.38, what is the decision? If Altman, as per 1968 model, if your answer is greater than 2.99, your company at safe zone. It is a non-failed company, non-distress company. That is a comment you have to put. No need to mention, man. No need to mention why you are taking 1968 model. So based on information only, you have to decide for the calculation. So if you know it is a which model, no issue. No need to say to examiner. But presentation is very, very important, Harish. What is the presentation, sir? You have to write entire theory here. Wow. So we are using Altman G-score for production of corporate distress for unfortunate limited. In corporate distress, it covered under 1968 model. In 1968 model, you have to write the G score 1.2 x1 so and so. X1 equal to what, x2 equal to what, x3 equal to what, x4 equal to what. After writing that, you have to write the decision. Or if it is answer greater than 2.99, if it is answer less than 1.81, if it is an answer between what. After writing this entire theory content, you have to put a word analysis, you have to calculate. After calculation, you will get an answer. After that, you have to use a word called conclusion or comment. You have to say what decision based on that analysis. So presentation is very, very important for Altman G-score also. So just you can easily say. So with the direct calculation part, with the 2 minutes, I said answer is 6.38. For that 6.38 calculation, you will take 3 minutes. Yes or no? Na? For if you show the direct answer, how you expect full marks? You will not get, na. That's why we have to show the presentation. Next. So illustration number 6. This question asked in December 17 for 12 marks. December 17 for 12 marks. Here also they provided x1, x2, x3, x4, x5. X1 liquidity measure, working capital divided by total asset. X2 reinvestment of returned earnings divided by total asset. X3 profitability measure, EBIT divided by total asset. Next, X4 leverage. If they provide market value, it is 1968 model. If they provide book value, it is 1983 model, unless they specify. It is a 1983. Why? Because book values are given. Okay. X5. Because of 5 ratios, it is covered under first 2 models only. Because of book value, it is a 1983 model. So 1983 model, you know the formula, 0.717 x1 plus 0.847 x2 plus 3.107x3 plus 0.420x4 plus 0.998x5. So if you calculate, you will get an answer 4.88. So this 1983 model have a different decision making. So what if your answer is greater than 2.9, you are at a safe zone. If you are at less than 1.23, you are at a gray zone. No. You are at danger zone or a red zone. If your answer between the two values, you are at a gray zone. Same here also, you have to write entire theory content formula and x1, x2, x3, x4, x5. After that, you have to do analysis. That is nothing but calculation. After that, you have to write the conclusion or comment. Sujit, note and mention chesi theory. Okay. So note and mention chesi theory rase okay na sir. No need to mention note, man. So you can observe solution. As per book value of equity to book value of a total debt, given in the problem place of market value of book value of total debt, the value of G-score is to be computed as per Altman 1983 model. So even though if not like this, you can write like this also. So for the purpose of corporate distress, calculation, we are using Altman G-score for which company it is? S&Co Limited. In Altman G-score, it is we are using here 1983 model because X4 is a book value of equity and preference divided by book value of a total debt. So next G-score equal to so and so, X1 equal to so, X2, X3, X4, X5. Decision 2.9 less than 1.23 between. After that, you have to do the calculation called analysis. Which is okay. Next, let us check illustration number 7. From the information provided. So this kind of questions I said. So in this kind of questions, they are not mentioned any model name, and also they not provided direct values. If they not provided model, we know how to decide which model it is. Okay. Next, when it come to there is no direct values, you have to calculate ratios also. Now see, yeah, I find out the clue, man. What is the clue I have? Market value of each equity. The word each means MPS. The market value of each preference. Each means market price of preference share. It is called equity share. It is called preference share. Harish has a doubt. Sir, in concept book, it mentioned as a 1983 is only for privately held companies, but sixth term it is a no, man. There is no specification of private held companies and public held companies. Even though private companies have a book value as well as market value, but they are not listed in the share market. That is the difference between share market price in private and public companies. No. That is not a proper explanation for this. The private companies also have a market prices. Don't focus on that kind of explanation, that kind of concept. Your doubt solved or not solved, man? So we are not deciding model based on the private company and public company. Why? Because both companies have a market prices and book values. Okay. If they provide market price information, it is 1983 model. If they provide book value information, it is a 1983. Sorry. If they provide a market value information, it is a 1968 model. If they provide a book value information, it is a 1983 model. Don't focus on the company nature. Okay. When it comes to illustration number 7. So in this problem, you have to figure out x1, you have to figure out x2, you have to figure out x3, you have to figure out x4, you have to figure out x5, and you have to decide the model. So because of this MPS, I am deciding it is a 1983 model. Yes, it is a 1983 model. Next. Sir, in study material 1968 model, x5 is 0.99. No. So from last attempts, from you can observe this is a drafted, this dragged from, this solution is dragged from suggested answer. In suggested answer also they provided one. You can rely on one only, Ganesh, no issue. So you can observe in December 23, in December 23 also they focused on one only. It also be a suggested answer solution. Okay, I decided it's a 1968 model. Let us calculate x1, x2, x3, x4. So you know how to calculate working capital, current asset minus current liability. Now next, total assets. So total assets, uh, you can take a total assets balance sheet total. Total assets equals to total assets minus fictitious assets, if any is there. You can also calculate like this: total asset equal to fixed asset plus current asset. Okay, the ultimate thing is ignore the fictitious assets. If you take balance sheet total, you this include fictitious assets, that's why I reduced. If you take individuals, fixed asset and current asset, here we are not including fictitious assets, that's why directly calculating fixed asset plus current asset. Next, retained earnings. All reserves covered under retained earnings. Ganesh, your question solution. So, what are the doubt you have solved? So when it comes to retained earnings, all reserves. That reserves need to reduce miscellaneous expenditure. That is nothing but fictitious asset. Miscellaneous expenditure is also known as fictitious assets. That why? Because profits are undisclosed profits also be known as fictitious assets. That is nothing but miscellaneous expenditure. Next, EBIT. So they will give sometimes sales. So you know the income statement, right? Sales less variable cost, you will get a contribution less fixed cost, you will get EBIT. This is the one alternative. Sometimes you have to calculate from down to up. EAT plus tax, EBT, EBT plus interest, EBIT. So they will confusing you. Don't confuse. Calculate like that. So EBIT, EBT plus interest on debt. Next, market prices is given. Number of shares into market prices, you will get a market value. Book value of a total debt is nothing but long-term debt plus current liability. So sales they directly given in the question. You have to consider that. So x1, x2, x3, x4 information is there. If you calculate, you will get a ratios. Insert in the equation, you will get a G score. Any doubt regarding this advanced model? Next, when it come to illustration number 9. When it come to illustration number 9. So net sales is given. Price earning ratio is given. First, just understand this. I said so many times in our valuation point of view, if they provide P ratio information in the question, P ratio information in the question, it is a clue for MPS calculation. It is a clue for MPS calculation. Now dividend payout ratio is given, dividend price per share is given, corporate tax rate is given. So with help of this, you can find out MPS. With help of this, you can find out MPS. As well as there is a no EBAD. There is a no EBAD. You have to figure out EBAD also. So total assets is there. Working capital is there. Working capital is there. Return earnings is there. Reserves on surplus. Return earnings is nothing but reserves on surplus is there. Sales is there, but there is a no information of MPS. There is a no information of EBAT. We have clue only P ratio. With help of if you figure out this EBAT and MPS, you can easily solve. You can observe it also been 1968. Why I decided it's a 1968, even though he not specified, because of this P ratio. Because of this P ratio. In this problem, calculation of EBAT is very, very important. Let us check here. Calculation of EBIT. So dividend payout ratio is given. So with the help of that, I find out that DPS, that is nothing but 20. So that is nothing but 50%. So how we got EPS? dividend payout ratio equals to EPS divided by EPS. Now 0.5 equals to 20, that equal to EPS. Now EPS equals to 20 divided by 0.5, that equivalent to 40. Okay. Now we are doing a reverse calculation. Number of shares into EPS. You will get EAESH. I think there is a no preference dividend. That's why I am not adding. If it's a preference dividend, you have to add. You will get a PAT. Because of no preference dividend, the direct PAT is nothing but 1,60,000. Add tax value to PAT. Add tax value to PAT. You will get PBT. Add interest to PBT. You will get EBAT. It is a reverse calculation. Okay. Next, you can observe the MPS. PE ratio is given. MPS divided by EPS. So the PE equals to 10, 10 times, yes, 10 times. I don't know EPS, but I know I don't know MPS, but I know EPS. 40. That equivalent to 10 times. MPS equals to 400. Number of shares, you will get a market value. Next, that's it, guys. There is no new points in this Altman G score. One point you have to keep in your mind. So one attempt, they specified like that. Yeah. Yes, Sujit. In new syllabus, maximum this kind of questions only they're asking. You have to check all questions. See, there is a new point is there. Market price of listed shares having a face value 10. The balance sheet date was 870. So MPS equals to 870. So what I told, why what lengthy man? Simple. There is only thing is don't feel like that, Sujit. The only thing is EBAT calculation and MPS calculation. Remaining all information directly is there, na? What is the X1? Working capital divided by total asset. See, current asset. Sum of these two is known as current asset. Current liability directly given. Current asset minus current liability, working capital. Working note 1 is completed. Divided by total assets. You can observe this is the total assets, but not include fictitious asset. 14 lakh is the total asset. X1 completed. What is the X2? Retained earnings divided by total assets. We already calculated the total assets. When it comes to retained earnings, reserves and surpluses minus fictitious assets. Reserves and surplus is completed. X2 also you will get an answer. X3, EBAT divided by total asset. So we have to calculate EBAT from reverse. So EBAT divided by total asset, you will get X3. X4. So with help of PE ratio, MPS, number of shares, numerator, divided by total debt, X4. Sales directly given, divided by total asset, X5. Okay. Just advance, some bit of advance, you have to figure out EBAT and MPS. When it comes to illustration number 12, it's not a mistake, guys. Students are feel it is a mistake. It's not a mistake. I said if they specify, go with the specification, even though all information you have. They're asked 1983 model. They're asked 1983 model. If they ask 1983 model, even though there is a MPS information, don't focus on that. When we have to focus, if there is a no clarity, if there is a no clarity in that model, then only we have to check X4. If they specified, don't focus on the remaining things, just go. So that's it, guys. That's it. Next, Altman G score completed. NCR model is completed. Next concept is called Beneish M-Score. Beneish M-Score. So last time bouncer this only. Last time unexpected question. So but few students, who the students followed my regular classes, they all are wrote, but students who followed my marathons, they're not wrote this question. Why? Because in marathon I said it is not important. Okay, but now I'm not doing that mistake. Why? Because important. Okay, when it come to illustration number 13, when it come to illustration number 13, so this is called Beneish M-Score. So we are using company or uh, company prepared financial statement, true or fair view or not. For checking the company prepared financial statement true or not, for the purpose we are using Beneish M-Score. So Beneish M-Score is like, see, minus 4.84 plus 0.92 DSRI, 0.528 GMI, 0.404 AQI, 0.892 SGI, 0.115 DEPI, 0.1 minus 0.172 SGAI, minus 0.327 LVGI, plus 4.679 TATA. The words TATA, LVGI have a full forms. You can observe here. Okay, but in exam point of view, they are not use total information to calculate all those things. They will give information like directly TSRI, GMI, AGI, SGI, DEPI, SGI, LVGI, TATA. So you need to write only thing called this equation. So you have to mug up. There is a no explanation for this quote. Okay, next. So when it come to this problem, so if your answer, so now if your answer cutoff M score is minus 2.22, the score is less than the cutoff score, that suggests that the company is not manipulating the earnings, and score is greater than the cutoff score, that is nothing but 2.22, then advocate that company is maybe manipulating its earnings. So if your answer is less than 2.22, company are not manipulating their earnings, but answer is more than 2.22, rather than 2.22, it means there is a chance of manipulating. You have to advocate that. The word advocate means you have to provide a committee and cross check that financial statements once again. So that is the Beneish M-Score. Guys, clear? So all information they will provide with, you have this code, you can easily answer. Okay, so if you're okay with these concepts, I start the capital adequacy ratio. We have a less time today, the only 1.5 hour session today. Composite score. What is the composite score? Okay, next concept, capital adequacy ratio calculation. Capital adequacy ratio calculation. So they tested in June 23. This attempt, there is a high chances for this question. So only one time he asked, sir. So there is a high chance of uh, chances for this question for this attempt. Now when it come to capital adequacy ratio, so this all are the theory content. I am not ready to explaining here. I am not getting its score. So this is a score. When it come to decision making, less than 2 minus 2.22, books are not earnings are not manipulated. If answer is more than minus 2.22, there is a chance of manipulation. That's it. So this is totally question. They will give this scores. Only one problem we have. Only one problem we have. There is a no new calculation part for that. They provided a direct calculation information also. If you have a if you have a total information, then we can figure out the what is what. There is a no information to find out what is what. They're directly given. Only one problem we have in our materials. Okay. Next, it come to when it come to capital adequacy ratio. See, so Basel, there is a concept name called Basel norms. So banking all global countries creating setting a meeting to create policies and principles. Create policies and principles for banking sector. Banking sector. Why? Because each and every company is linked to each other. If one company fails, automatically it impacts another country, right? That's why money is a key role playing in all the relations. That's why they're focusing on banking sector. All global countries need to follow these Basel norms. According to Basel norms, they specified capital adequacy ratio. So when it comes to capital adequacy ratio, minimum every company need to maintain 8%. If banking company maintain more than 8% on their risk weighted asset, it is best banking companies. But minimum, every banking company need to maintain 8% on their risk weighted assets. Okay, this is the subject. But when it comes to the calculation, they are providing calculation part. See, so how I find out capital adequacy ratio? So the capital adequacy ratio equals to capital adequacy ratio equals to capital divided by risk weighted assets. Risk weighted assets. Now, capital is nothing but tier 1 capital plus tier 2 capital divided by risk weighted assets. Now working note 1 for tier 1 capital calculation, working note 2 for tier 2 calculation, working note 3 for risk weighted assets. If you know the tier 1 answer, tier 2 answer, risk weighted assets, then you can easily calculate a capital adequacy ratio. Ultimate decision is two conditions. First is capital adequacy ratio minimum 8%. Minimum 8%. Again, capital adequacy ratio minimum 4%. Only tier 1 capital divided by risk weighted assets. This 8% for tier 1 plus tier 2 capital divided by risk weighted asset. This second condition for tier 1 divided by risk weighted assets. Total point of view minimum 8%. Only tier 1 capital point of view minimum 4% is a required ratio. Required ratio. Okay. Without it, let us check the tier 1 capital. Let us check the tier 1 capital. Guys, just understand this information is not there in your material, but you know this information, you can easily answer the capital adequacy ratio calculation. So calculation of tier 1 capital. So what are the list covered under tier 1 capital means common equity share capital, statutory reserves set by law and regulations, other disclosed free reserves including share premium, but the note point is if P&L account profits, credit balance means profits, you have to consider current year as well as previous year. Sometimes they will give P&L account credit balance previous year. Even though it is a previous year, you have to consider for current year calculation. That is a note point you have to learn in other disclosed free reserves. Next, perpetual non-cumulative preference share capital. So perpetual non-cumulative. The word perpetual means lifelong. Non-cumulative means don't focus that way, just focus on the words. Perpetual non-cumulative preference share capital, it also be a part of the tier 1 capital. Next, innovative perpetual debt instruments, that is nothing but systematic investment planning securities, if any is there, that is covered under innovative perpetual debt instruments. This also be a part of the tier 1 capital. Next, capital reserves representing surplus arising out of sale proceeds of assets. Only you have to consider capital reserve of arises only sale proceeds of the asset. So only one note point is there, that is called you have to consider P&L account current year profit as well as previous year profit. But when it comes to tier 2 capital, Every point has a note point. Every point has a note point. When it comes to tier 2, calculation of tier 2 capital, first undisclosed reserves, if any is there, you have to cover under tier 2. Revaluation reserve, that revaluation reserve also created out of cash, used only for revaluation loss. So if it is a cash creation, then only you have to consider. If it is not a cash creation, don't consider. There is a note point. Revaluation reserve discounted by 55% because it created out of cash. For example, the revaluation reserve is 100 CR. The revaluation reserve is 100 CR. Don't take 100 CR as a tier 2 capital. Out of this, 55 CR is a discounting. Only 45 CR is a considerable amount. That is a note point. Very, very important. So don't take total value they said. You have to consider only 45% of the said value. Next, general provisions and loss reserves. General provisions and loss reserves. When it comes to general provisions, that is nothing but change against profits. Loss reserves means appropriation of the profits. Now, here also note point is there. Value of general provision and loss reserves not exceed 1.25% of the business risk weighted asset. For example, business risk weighted asset equal to the word business. Some in a risk weighted asset also two types: business risk weighted asset, non-business risk weighted assets. You have to consider only business risk weighted asset. For example, they consider 300 CR. Are you clear? Sorry, risk weighted assets are 300 CR. Now, general provisions equals to 180 CR in the question paper. Now, this 128 CR you have to check. So, risk general provisions 1.25% of 300 CR. So, 1.300 into 1.25%. That means 37.5 crores. So minimum acceptable amount for a tier 2 capital called general provisions and loss reserves is 37.5. You wrongly taken 180. Don't take 180, take 37.5. That is the mean for value of general provision and loss reserve not exceed 1.25% of a business risk weighted asset. Next, when it comes to hybrid debt capital instrument, perpetual preference share capital, redeemable non-cumulative preference share capital, redeemable cumulative share capital, and subordinated debt like debt instruments. So when it comes to subordinated debts called instruments should be fully paid up unsecured. So unsecured debts is known as subordinate debt. In this unsecured debts, you have to consider only 50% of tier 1 capital. So you have to calculate tier 1 capital into 50%, not exceed that amount. So if you know these points and note points, then only you can solve a problem given in June 23. No points there in your material. Even though there is a no point, they asked that question. Guys, clear? So please understand all points and all adjustments. We can easily solve. Let us check here. Illustration number 1. And wait, one point I missed here. Risk weighted assets. When it comes to risk weighted assets, if any all loans provided to public is a assets to the banking company, right? So corporate and retail loans, there is a risk 100%. The word risk means there is a chance of non-repayment. If it is a loans provided to residual mortgage loans, so taking a document, if company give a loan to that property, that is called residual residential mortgage loans. On that loans, there is a chance of failure 50%. Loans to OECD members. So there is a group of countries like petroleum selling countries. If you provide loans to that OECD members, sovereigns, foreign companies, there is a risk of failure is 0%. Now, interbank loans to banks incorporated in OECD member countries. If OECD member country interbank loans, there is a risk, there is a chance of failure 20%. If interbank loans to bank incorporated in other countries, there is a chance of failure 100%. You have to understand this also. Next, in this problem, working note 3 need not to calculate because they given. So risk weighted asset for credit and operational risk are 12,000 crores. Risk weighted asset for material risk is called 5,000 crores. I already said the word operations means business. The word operations means business. Now let us check. Uh, Calculate the amount of capital fund. What is the capital adequacy ratio of the bank? Comment and advise on the adequacy capital of bank and need to monitor this ratio. So this is the answers you have in your suggested answer. There is a no clarity answer. There is a no step-by-step answers in anywhere in YouTube also. Only we have that answer because we researched on that. So let us calculate. Common shares, Tier 1 capital, statutory reserves, Tier 1 capital, Tier 1 capital, Tier 1 capital, capital reserve also, Tier 1 capital, balance in P&L account at the end of the previous year. Previous also consider Tier 1 capital. So revaluation reserve is a Tier 2. Provisional losses also Tier 2. Debt capital instrument also Tier 2. Perpetual debt instruments also Tier 2. Perpetual cumulative preference shares is a Tier 1. Redeemable cumulative preference shares Tier 2. Okay. Now calculate Tier 1 capitals. 500 plus 250 plus 300, 150 plus here one is there 50. Tier 1 capital equals to 1250. Next, Tier 2 capital. So in a revaluation reserve, don't take 100%, consider only 45%, 55% is discount. It means 200 into 45%. Here you have to consider only 90 crores. Okay. In provisions and loss reserves, don't take total value, cross check with 1.25% of business risk weighted assets, not exceed that. What is the business risk weighted asset? 12,000 crores. 12,000 crores into 1.25%. The acceptable value is 1.25% of 12,000 crores is 150, but they consider 300. Don't take 300, just take 150. 150. Next. So debt capital instrument, there is a no work adjustment. Perpetual debt instrument also there is a no work adjustment, and redeemable cumulative preference shares also no adjustment. Let us check. Tier 2, 90 plus 150 plus 200 plus 50 plus 50. So Tier 2 capital equals to 540. Now the total capital equals to 1790. This is the way you will get this answer 1790. Next, capital adequacy ratio. So Tier 1 capital plus Tier 2 capital divided by risk weighted assets total. The risk weighted assets total 17,000 crores divided by 17,000 into 100. So capital adequacy ratio equals to 10.52%. Minimum they said only 8%, but that banking company maintaining more than 8%, it is a best banking company. Why? Because they are focusing more than 8%. Second condition you have to check. Tier 1 capital 1250 divided by total risk weighted asset 17,000 into 100. So minimum Tier 1 capital divided by risk weighted asset 4%, but company maintaining 7.35%. The best company. So that is a comment you have to write. So since capital adequacy ratio 10.5%, which is higher than the 8%. Next, so the further won out by the fact the ratio of tier 1 capital 1250 divided by 17,000 7.35%, that is well above the 4 to 4.5%. Sorry to say, I am not said here, I said only 4%, right? Not 4%, between the 4 to 4.5%, minimum 4 or 4.5%. This is the calculation part you have in this chapter 4. If we focus on these all models and all concepts, you can easily get 7 marks. So we have in today's session, I'm not ready to discuss theory. I will give only guess questions. When it comes to guess questions, the first question is enterprise risk management. The second one is risk retention. Yeah, as of now, in book only one problem is there, basic problem. In exam point of view, they are asked this question. Only two problems we have relating to capital adequacy ratio. So third question, ERM, risk retention, value at risk. Under risk reduction, reasons for corporate failure. And the next one, types of risk. So if you learn this types of risk, you will get one MCQ also in every attempt. So these are the important theory concepts we have, guys. Next, another one is there. COBIT norms. So these are the guess questions from this chapter. Okay, guys. Have any queries? Ask me now. All of you, please respond. If you're okay with this class, I will shut down. You have no doubts? Have any doubts? Ask me. 7 questions. One will become for the your guess. My guess 3 is there, man. ERM, COVID norms, risk reduction. This 3 is my guess. Sir, are you going to revise the business valuation chapter for 2 hours only? All concepts will cover online. Yes, Ganesh. I will explain concept detailingly. I will give one problem for every concept. It will take only 2 hours. Harish, I can't, man. Go. You discuss with your friends and your special ones. Then you can easily mug up. That is the only chance you have, Harish. Thank you. Okay, Sujit. Thank you, Ganesh. That's it. Can I close my session? Sure, Ganesh. I will update. Okay, Murgesh Sai and hi. Hi, can I reveal your name? Hello, hi. Uh, Sir, Nani, we have only few concepts. Don't take a risk. Why? Because last attempt we taken a risk called Beneish M-Score, and every attempt I said it is a not important, not important. But last attempt they asked. Um, when it come to Model 3, no problems is there, but there is a chance of creating the problem. There's a chance of creating the problem. That's why you have to learn that Model 3 also. That is my sincere suggestion. My name is Anand. Okay, okay, Anand. Then okay, guys. Bye. Take care. We will meet next session tomorrow.